BOI joins us right now on the show. Good having you. Thanks so much for joining in, Ms. Iyer. View on the RBI measures, and do you see the recent steps increasing the MSL and bank rate as only a short-term measure?
See, RBI measures is only of short-term nature. It is basically to smoothen out the rupee volatility and the entire exchange rate system. I see it as an interim measure to calm the market. It will not have any impact on our borrowing cost, in fact. That is what I see, and I don't think it is a prelude to reversing the monetary stance of the RBI.
Afternoon, ma'am. Now, the bond yields have moved up due to the RBI's measures. So how do you see the short-term and long-term bond yields moving going forward, as well as the overall liquidity situation?
Yeah, bond yields have moved up, so the short-term rates have definitely gone up. So banks which are relying on the borrowed funds in the short-term end may get affected in case this is continued for a long time. For a bank of our size and its place in the market, our deposits are very well diversified and we are very comfortable and we don't have any negative caps in the short end.
What's your exposure to wholesale funding or bulk deposits, and how do you see your cost of funds being impacted due to the recent RBI measures?
See, my high cost deposits of the bank have in fact come down from almost 15% to about 8.43 now. I don't see any impact on the borrowing costs in the immediate future.
What about treasury gains in the first quarter? Given that bond yields have gone up by nearly 50 basis points in the last few days to 8%, do you see your treasury book being impacted?
See, all the banks had a good treasury income in the first quarter. So with the bond yields going up, the treasury incomes definitely, we will not see the same kind of revenue in the second quarter. That's a given fact as of now. Going forward, how the credit picks up, that will decide how our interest income would get generated, and also the margin pressure. But as of now, I would repeat that there is no concern to the asset quality, greater concern to the asset quality or growth because of these measures. Of course, the credit growth is muted for the banking industry as such, and so also for the Bank of India. But the various steps are being taken, as you are aware. Steps are being taken to curb the inflation. More steps are being taken to prop up the growth in the near future. And I'm sure all these measures, you always see the growth and the impact with a lag effect. So I'm quite optimistic that things would turn out for the better, and certainly Indian economy also would come out of the current concerns.
All right. We'll leave it at that. Ma'am, thanks so much for taking the time out and being with us and giving us that perspective.